Okay, I had somebody ask me about day trading, and they asked me why I don't day trade. So I've been trading for 24 years, and I started off trading everything futures. I've traded everything you can think of, currencies. I've traded oats. I've traded cattle, silver, gold, everything, stocks, options. I can't really think of too many things I haven't traded. And then, of course, day trading was part of my lifestyle at the time. And then more of a swing trader now, where I'm not so much in and out that day, but I'll hold a position for maybe a couple weeks. And the only reason for that is because I just like to enjoy life. I don't like to be stuck to a computer. But day trading is actually not a bad way to trade. You can make some pretty good money doing that. I don't talk a lot about that only because I don't think beginners should start day trading. I think they should probably trade the way I've been talking about for the last several months. About this is more of a longer term and a buy hold for several weeks, and that's probably safer. And then once you get into learning how this works, then you can start day trading. At least that's what I believe beginners should start with. But what I'm doing is building the foundation. So everything that I do here also follows in the day trade charts. So I'll show you. This is a day. So if we go into a 4-hour chart, you can still see that this is still in the balance area. These are balance areas here. If I go into a 30-minute chart, this is a larger balance area, and you can see how the markets hit the top, came down, hit the top, came down, and this is live. So this is where we're at right now. Okay, so if we go into a 15-minute, same thing. We're still in this balance area right here. Market came up, hit the top, came down, hit this bottom, came a little bit more than halfway, came down. So day trading, I usually use the 5-minute chart. So this is what I do. So if I'm going to day trade this, I'm going to use the same concept that I use with the swing trading. I look for balance areas like this. Here's a little balance area here. And then you look for, so I can draw this out for you. You look for some lines of support and resistance. So there's one there. Obviously, you've got the bottom of the balance area here. So that's a support right there. And then you've got your balance areas. Here's one here. You can't really see it, but anyway, there's another one here. And so there's a balance area, there's a balance area. So the same thing as a longer term chart. This is really no different than that, except it just moves faster. Is you look for these balance areas, you look for this resistance, and eventually this market's going to break out in whatever direction it's going to go. It's either going to go up, back up to this resistance, or it's going to head on down to the support, and that's what it did. It just went down, and then it kind of moved around in here. Another little balance area there, another little one here, came up and hit another balance area right here. And this is what I look for when I day trade. Again, it did the same thing over here. It hit the top of this, which is resistance. And like I said before, if it breaks above this, then it's just going to take off. And then I would enter into some positions here. And it didn't. It broke loose and it came down here. So like I said, this is live. This is a market actually moving right now. This is what it's really doing. So it's been in this balance area for several days already. And so I still use that even though I'm day trading, because day trade, I might get in for just, less than an hour. And but you know, everything still applies. You know, you still have these balance areas. So a very simple system. The only difference would be you almost have to not really rely on news reports, because I don't like to look at news reports, and I don't have to when I'm a swing trader. But in something like this, you might have to do that because it can really move the market in the short term. And so you almost have to look at the important ones, maybe CPI, whatever the market is, the public is interested in right now. And right now they're interested in interest rates. And so that would be a big thing to probably look at and keep track of. CPI is another one. And, you know, even though those don't mean anything to me, it does to the market, and it could move the market. If this market was sitting here and a report was coming out just in a few minutes, I'd be very careful on the direction, because if it breaks loose here, it could take it all the way up to here just from that one report. Now, if this was a longer term chart and a market broke up, let's say this was a daily chart, and the market broke up because of news, then it's more than likely 90% of the time, because this is a downtrend, it's going to head back down. It's never going to make it up to any top. Where this is different, because this is day trading, so it can still break loose, come all the way up to here, hit this major resistance, and then turn around. So this is a different strategy when you're day trading. And so the news can make a difference with this. And so that's why I don't day trade a lot, because I don't like to pay attention to news. But when I see setups, you know, like this right here, and the market is actually kind of weak and it's going back down, this could be a nice little day trade right here. Just shoot here. And you can day trade options. I day trade options, but I also day trade the futures market, the E-minis, and I'll buy contracts. You know, I'll buy anywhere from about 4 contracts I usually buy, and that's 50. That's about $200. Yeah, it's about $200 a point when it moves down. So, you know, if the market's going to move down 10 points, that can be $2,000 right there, you know, profit. So that's not bad for a pretty good move. So where did the market move? Almost 4,000. I mean, there's about a 10-point range right here. So it could have made $2,000 on a move like this with the futures. Now with options, a little bit different. You can still make good money, but you're going to have to definitely buy options that are at the money or in the money. And you can buy them for this month. This is March. It's not going to expire for another whatever, couple weeks, 3 weeks, and it doesn't matter because you're in and out in the day, so it doesn't matter on that. And they're cheaper if you buy them. You buy March options. So that would be my strategy if I was going to do this. Now, like I said, I do day trade. I don't talk about it only because I don't want to really encourage people doing that, because I don't think that's a good way to start. I think you should start with something that's more conservative. Okay. Yeah, but people have been asking me about it, so I thought, okay, I'm just going to put this video out and I'm just going to let them know. And this is very simple. I mean, I'm not using any indicators. This is telling me everything. This same strategy is what I use in long term. There's a 5-minute chart. Go back to a 4-hour chart. It's the same thing. It's exactly the same thing. I still have the balance areas. When it breaks down, it comes down to another balance area. The only difference is, of course, I put in larger positions in here, a lot larger positions, because they're going down. They take a while, and by the time it hits wherever my target is, which is eventually down in this area, then I get out. And then I let it retrace, come back. on the retracement, I can buy put options there, come down. When it breaks here, buy more put options and comes down. This would be the next target area. So it's kind of slow, a slow process with that happening. And that's why I stay in for, whatever, a week or two. And I think that's very conservative. You can still make a lot of money doing this. For some people, they don't have the patience for that. But again, if you are going to day trade, go back to the 5-minute. The concepts I'm using, the strategy is exactly the same. There's no difference. You can even think of this as a daily chart and say each one of these are months, and it took certain months to get up here, a certain amount of months, and the same thing here and the same thing there. And if you look at a daily chart, same thing. Took time to get up there, come down here, get up there, come down, up. So it's exactly the same thing. There's no difference. It's like I said, the only difference is this happens faster because it's a 5-minute chart. You can see it here. It's live. It's still coming down. And I believe it's, this is already, 12? There's still an hour of trading. I believe this is probably going to come back down here, by the end of the hour. And so if I was trading, I would trade this thing down, and I would keep my stop probably somewhere around here. And yeah, I would just trade this thing down because I'm pretty sure it's going to come down to at least here. But, like I said, 10 points is, for 4 contracts, that's $2,000. And it can move down here, and by that time you can have already made maybe $5,000 bucks. It could be that easy. But it's not that easy because it's a very emotional game. You have to, when you start to see that and you start to make money and all of a sudden it goes reverse and you're starting to lose that profit, a lot of people freak out and they want to stay in there because they think it's going to turn around. You don't want to do that. And that's why you want to place your stops. And you have to be very diligent about your rules that you have, and you have to stick to it. Because believe me, I've lost lots of money in the past by not sticking to my rules and having money management. But anyway, so yeah, like I said, I would have placed my stop somewhere around here. It looks like the market's coming close, but it might not make it because it might be building another balance area in here and then break down, or building this balance area and then coming back up. And if it comes back up, you get out right here, and then you gain your profit between here and here, which is still could be $2,000. All right, so that's a simple explanation. I don't really have to explain too much because, like I said, I trade this exactly the same as I would trade longer term, as far as following these patterns. These patterns develop, and it happens in every chart that you can think of. Stocks, futures, doesn't matter. Currencies, it's all the same. You're still going to have these balance areas, and that's how I trade them. It's that simple. There's no indicators here. I don't have any volume I'm looking at. There's no EMA in here. 200-day moving average, 50-day moving average. That's what people use. I don't use any of that stuff. I don't need it. It's right here. It's this simple. I think a lot of those indicators are put there because it makes things really complicated, and that's why 95% of the people lose money trading options, and they said 90% of people lose trading stocks, but I think it's greater than that. I think overall it's probably 95%. And that's because they haven't developed a strategy and they don't follow the rules. Okay, so this is a quick video on day trading, either options, you can trade options, or day trading the contracts on the ES with the E-minis, and that's what I trade. Mostly. I'll trade some options too sometimes, just depending on, I'll look at the options and I'll see what the price is on those. So I think that's it. I'm going to make another video on how to buy options. And because I made this video on day trading, I'm going to make a video on buying options for day trading also. So that either be a separate video than the options video, I'm not sure yet. But either way, it's kind of the same thing. You know, option buying, the way I do it, is kind of unorthodox, only because, again, people go into all this technical stuff about buying options, and it's very simple. You don't have to do that. It's crazy how simple this is, but they make it difficult because they know how people are. People want to. It's like if you go to the doctor and they give you this little white pill and it only costs $10, you're probably going to think it's not going to do anything for you. But if they give you a red pill and they give it this really obscure name and it's really long and they charge you $500, you're going to think that thing's going to make a difference, and you'll probably get healed, you know, just from your mind over matter. So it's the same thing with this. They're trying to confuse you. They're trying to distract you, you know, using all those indicators and all the colors. That's why I only use one color here. And that's the name of the game. They're going to do whatever they can to make that 5%, to make that money, and the 95% lose. And it works. Works every time. So, okay, that's it for day trading. And like I said, I'm going to make a video on how to buy options. Okay, talk to you later.